FM. That is the newest from Pink. It's called Walk Me Home. Hi, they call me Morning Dave, and we call the fellow I do this with every morning, Phillip Statler. That's when we check in on your finances. Let's go downtown, see what's going on at Statler Financial Services today. Phillip is on the phone. Good morning, Phillip. How are you?
Hey, good morning, Dave. They doing well today. Coming to you. I got a repairman come to the house this morning, so I'm sitting here at the house waiting for him to show up. But hey, I had a great meeting last week up in Indianapolis, and met with a great group of financial advisors and got a lot of good education up there, especially when it comes to tax planning and tax Roth conversions and some of those type of things. Very good meeting.
Even those of us that have relatively routine tax returns kind of found out the hard way last year. There were some changes in the tax laws. I would imagine that for folks that have some of the more esoteric tax instruments, it really helps having somebody on the line that actually understands all the ins and outs of the law. You can actually save yourself a running ton of money, can't you?
Well, you can. If you think about it, Dave, right now, we are really and truly in an all-time low when it comes to tax rates. And so it starts to make sense to run some numbers and see about doing some Roth conversions, especially if you have some relatively large IRAs and you're in a relatively low tax bracket. It starts to make a ton of sense to kind of run those numbers and see what they look like.
I have heard that there are a lot of circumstances where just taking the hit now and turning that IRA into a Roth IRA makes really good sense from a long-term financial planning basis. Does somebody want to do that before or after they start withdrawing?
They want to do it before they have to start taking RMDs, because you cannot roll over your RMDs into a Roth. So the best time to start is when you're in a lower tax bracket. So if you're in a 12% tax bracket, or then it starts to make sense to really start looking at making that change.
One more in and out that makes a professional planner to work with something that can preserve a fruitful retirement for you and your family. Yesterday, the last week was kind of interesting. When you left me solo on Friday, I thought we were going to have a halfway decent day, and you and I were kind of noodling it through before we went on the air. 255 points down on the Dow, 67 on the NASDAQ down, and the S&P down by 11 and 7.5. That was the low loser of the bunch, and that was down by 1/3% on Friday. Other than just Boris Johnson over in Great Britain needing to delay his Brexit exit plan, there really wasn't a lot going on. I think we're kind of writing it up as much as anything to profit-taking at the end of the week, right?
That's what I really think it was, Dave, when I look at, we had a decent week going into Friday. And so I think people just were thinking, hey, I made some money, let's take some money off the table. And before the weekend, because, sometimes weekends you just never know what's going to come out.
I was going to say that's probably one of the other factors as well. As weird as the world is these days and the stuff that can go on over a weekend, who wants to leave your money where you can't touch it? Take it off and put it back on the table the next morning when you've got business opportunities.
Well, that's true. And so, we'll just have to wait and see what happens today and the rest of this week as earnings and financial information starts to come out, though there's not a lot of economic news yet even this week.
Yeah, we're looking at a relatively quiet weekend because it is Monday morning, and after the weekend, we're a little short of reports as well, mostly news tidbits as much as anything. One of the reports I found interesting, Goldman Sachs put out a report over the weekend showing that publicly traded companies' CEOs are saying their plans for capital spending for research and development, merger and acquisition activities expected during the next year to be down by 6%, and that puts us down in the range of one of those years we don't like mentioning, 2009. It's not that things are bad quite yet, but we're starting to talk ourselves into declining spending. And, as we've always talked about, recessions can be caused by an attitude more than as much as by an event. Looks like we're starting to talk ourselves down a little bit as well, doesn't it?
Well, I think it starts to make sense as some of the numbers do indicate a slowing economy. Businesses don't want to be out there spending a lot of money and then find out that, hey, we're in a recession. So they'd rather be cautious heading into this time of, kind of at the end of the expansion mode. That they want to be careful. They don't want to overextend themselves and put themselves in a bad situation should the economy start to tank.
And the pitfall that goes along with that is a 6% decline in all those measures. That could help the economy go down instead of just insure against it going down.
Well, that's always true. You've talked a lot about, hey, we could talk ourselves into a recession, and I'm sure that happens a lot of times. But as the numbers come out, that's what those guys are looking at. And so as they look at those numbers, they have to make some realization of what they think is going to happen in the next 6, 12, 18 months as far as their budgets and their spending.
Understood. Now, you start getting into the notion of, is it reactive or is it going to be self-fulfilling prophecy down the line?
Yeah, you do, but is it self-fulfilling? Maybe in the fact that some of the numbers are starting to indicate a slowing economy. And folks, I mean, you think of it at home, right? If your hours are cut at work, what do? Well, you start changing your budget at home. The business world is no different. If they see things start slowing down, they may still be profitable, but they have to start backing off some of their expenditures to be, good stewards of what they've been entrusted with.
Understood. The Bull and the Bear every morning right here on Light FM, right?
That's right.
One story that really is also kind of ticking the news ticker a little bit. Boeing is back in free fall again. They spent the weekend having what boiled down to a Twitter war with the federal government. Word got out that one of their test pilots had, to quote him, not on purpose, lied to the FAA about the safety of that 737 MAX. Boeing responded by saying, hey, we've been telling the federal government all along what's going on with that. We're clean, we're okay, buy our airplanes. The market isn't overly impressed with that. Even in pre-market trading this morning, they're down by another 2.5%. Is Boeing ever going to come out of this slump?
Well, I don't know, but I'm reading one of these quotes in here. They turned over emails to Congress, and Boeing expressed regret over those messages and is continuing to investigate. So, you know what? When there's smoke, there could be some fire there, and I'm sure that's what they're looking at.
Absolutely. I still say that 10 years from now, Boeing's handling this whole thing is going to go down as a textbook chapter on how not to handle a public relations crisis.
I believe you're absolutely right, Dave. This will definitely be one of those case studies.
Absolutely. One of the stock reports that you came out this morning for quarterly reports is one of the big ones that isn't a household name, I understand. Halliburton reported, the big oil field service company. How did they do last quarter?
They did. They came in basically as expected at 34 cents a share. Revenue fell short, though. Their revenue's been hurt by a slowdown in the whole North American shale drilling industry. I was looking at some of the comparison numbers, and they're down pretty much in most of the categories year over year. And they missed a lot of the revenue expectations by fact check. So, they weren't getting hurt too bad when I first looked, but they've gotten hit pretty hard now this morning. They're down about 1.2% this morning.
And the declining price of oil, we'll get to in a couple of minutes, probably won't help that too terribly much, because if the price of oil goes up, more activity happens in the shale oil range, and you need a higher price in order to support that.
Yeah, you do. It takes more money to excavate to bring that oil shale into the oil refineries. So you're right. Oil prices need to be higher to justify that expansion.
Absolutely. The financials are pretty well done in terms of the household names, but you'd mentioned that we had kind of top-line numbers from a few of the secondary players in the financial industry. How are they looking this morning?
Actually, I got the earnings per share, and as I look at a lot of them that reported, I don't see any misses. They've all been beats on the local or regional type financial institutions. The other piece of news I did have, though, is for those that like to go shopping at Saks Fifth Avenue, their parent company, Hudson Bay, is being taken private. That $2.30 a share. So they're trading down a little bit this morning. before the market opens. They were down about 0.75%. And so obviously the shareholders still have to vote on that, but it looks like there's an indication that it's going to be taken private.
Well, gosh, we aren't going to be able to make fun of overpriced jewelry during earnings season anymore.
Well, that and overpriced clothes.
That's true. Resetting the table for the morning hours. It was an off day on Wall Street on Friday. Dow was down by the better part of a full percent. NASDAQ a little bit lower percentage than that. The Standard & Poor's was the winner of the bunch. They were only down by a little over 0.33% on Friday. Let's turn the corner for the weekend, Phillip. How do things look for Monday, 45 minutes before the opening?
Hey, right now, Dave, it looks like we're going to make up for those losses that we had on Friday, at least at the open. The Dow is up $42. The S&P 500 is up almost a half a point to $12.37. And then the NASDAQ's up 0.5% to almost $40. So some good things looking up there. Then we look at the commodities prices. We got gold basically flat. Silver, wasn't sure what's the raise in that price, but it's up 1.2% this morning, up to $17.78 an ounce. And then we've got crude oil down about a third of a point, about a third of a percent, at $53.70 a barrel.
Down day to day, it looks like crude is kind of stabilizing in that low $53 range somewhere. It hasn't really changed all that much morning over morning for the last week.
Well, you're right. It doesn't. It looks like it's been hanging in there, about within a few, actually less than $1 fluctuation.
Yeah. Stability is always nice, even if it's at a number we don't like, and we really don't mind 53 a barrel as long as it doesn't go up from there. World markets, everything was pretty much green ink. Asian markets all closed up this morning by a tinge. Europe generally trading up this morning as well. They're evidently coping with the Brexit confusion over in Great Britain. They're actually up by 0.25%. Phillip, somebody need advice, and we were talking about it earlier. IRA conversion's part of the effort. How do I make sure my retirement survives fruitfully? How do I get a hold of you?
Give us a call at 382-0037, folks. And now, remember, we are in the lowest tax situation that we will probably ever see. So it's a great time to look to see if Roth conversions make sense for you to move some of that money out so that it doesn't get taxed at a higher rate in retirement. And then join us every weekend for the Statler Financial radio show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on your sister station, News Talk 730 a.m.
And back again here tomorrow morning on Light FM. Phillip, thank you so much. We'll catch you then, all right?
All right, thanks, man. You take care.
Thank you much. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Have you done your...
Hey, folks, I didn't get on here before we started, but I want to thank you for joining us today. If you like what we're doing, please like our page on Facebook, Statler Financial Services. Share this with your friends. Get them to like our page. Hey, and if you would like us to do a webinar, hey, send us an email to statlerfinancial@gmail.com. Just let us know that you're interested. Have a great day. I look forward to speaking to you again tomorrow.